Hey guys, welcome to my YouTube channel. Today's topic is sales and purchases and sales tax. Let's not waste time and start the questions. Question number 67. Erin is registered for sales tax. During May, she sold goods with a list price of $600, excluding sales tax, to Kyle was buying a large quantity of goods. Erin deducted trade discount of 5% of the normal list price. If sales tax is charged at 15%, what will be the gross value of the sales invoice prepared by Erin? First of all, we need to find normal sales price, which we will include in financial statements. $600 is a list price, and when you see some numbers, some figures under the name of list price, just bear in mind that it requires probably discount. More precisely, in the first place, it will be trade discount. And then we will look if there is a cash discount or not. So first thing we need to do, just decrease this amount by 5% and find the normal sales price. So let's do it in an Excel file. Sales equals $600 multiplied by 95%. And let's make this double entry for sales by $570. In the credit side we record credit sales, and on the debit side we record if the transaction is a credit transaction, we should record this number on the debit side as receivables by $570. Now it's time to apply 15% of sales tax, and let's do it. And if you remember from the previous questions of sales tax is recorded on the credit side when you sell. And let's do it. Sales tax equals 15% of total sales. And on the debit side, only receivables increase by sales tax amount, and that's why we are going to increase this 570 by 85.5. So let's do it, and 5.5. That's it. In the invoice, if you are asked what gross sales amount is, you have to summarize both of the sales and the sales tax, which gives us $655.5. I think we are done with this question, so let's jump into the next question, question number 68. At the 1st 2015, Laurel owes the sales tax authorities $23,778. During the month of December, she recorded the following transactions: sales of $800,000 exclusive of 17.5% sales tax, purchase of $590,790 inclusive of sales tax of 17.5%. What is the balance on the Laurel sales tax account at the end of the December? Let's solve this question by using an Excel file. And first of all, here we set up a sales tax account. At the 1st of December, Laurel owes to tax authorities exactly this amount. So let's record this number on the credit side of sales tax account as BD. And the rest of this question is just to find input and output sales tax. In addition to this, we will find closing balance at the end of December. Let's execute the plan. First thing we need to do is to find out output sales tax, which requires a little bit calculation. So let's do it. On the credit side, we should record this number because output sales tax represents money owed to tax authorities, and we should multiply this amount by 17.5%. And the output sales tax is 140,000, which is easy to find. When in an exam question, if the sales or purchase figure is given exclusive, it's easy to find the sales tax amount due to the fact that all you got to do is just to multiply these figures by sales tax percentage. Given this fact, needless to say anything else, I think. Let's find the input sales tax, which will become relatively difficult. When the number is given inclusive of sales tax, this means this number equals to 117.5%. And in this case, I'm gonna use a little math trick by dividing this number by 117.5%. And afterwards, multiply the result by 17.5%. So let's do it. First, I am dividing this number by 117.5%, and then multiplying this result by 17.5%. So let's see, which gives us 87,990. And the last thing to do is to find closing balance CD by means of a simple calculation. Okay, let's do it. See the figure here equals sum minus sum and that's it. I hope this explanation was understandable. And now let's jump into the next question. Question number 69. If sales, including sales tax, amounted to 27,612.5 and purchase excluding sales tax amounted to $18,000, what would be the balance on the sales tax account, assuming all transactions are subject to sales tax at 17.5%? Opening balance is not given. We assume, hence we assume opening balance of sales tax is nil. In this manner, we reckon opening balance is nil, and needless to write this in the sales tax account, completely unnecessary. Moreover, we need to find output and input sales taxes. So let's do it. Total sales amounts are given inclusive. As you remember from the previous question, we have a special technique to find out sales tax amount when the sales are given inclusive. Let's do it in that way. As you know, output sales tax are the amount owed to tax authorities. That's why we are going to record this amount on the credit side of sales tax account. That's it. And the input sales tax 17.5% of this number on the debit side. And in addition to this, we should find closing balance. Simply, I will deduct debit side from credit side. The outcome is $962.5. I think we are done with this question. Question number 70. The quarter ended the 31st of March 2012. Chas had taxable sales net of sales tax of $90,000 and taxable purchase net of sales tax of $72,000. If the rate of sales tax is 10%, how much sales tax is payable to the tax authority? Okay, let's move to the sales tax account right away. If the sales amount is $90,000, then sales tax will be 10% of this amount. Of course, it's output sales tax and input sales tax. Input sales tax is 72,000 multiply by 10%. And consequently, closing balance figure will be $1,800. Sales tax payable, and referring to the sales tax pay account, the correct answer will be option C. Now it's time to move on to the next question, question number 71. A summary of the transactions of Ramsgate, who is registered to account for sales tax at 17.5% on all transactions, shows the following for the months of August 2019. Outputs 60, exclusive of sales tax. Inputs 40,286, inclusive of sales tax. At the beginning of the period, Ramsgate owed this amount to the tax authorities, and during the period he paid this amount to them. Okay, let's do this in an Excel file, as usual, by setting a sales tax pay account. Opening balance is $3,400. Let's record this. And payment amount is $2,600, which should be recorded on the debit side because payments to tax authorities decreases are payable to them. In addition to this, let's find output and input sales taxes. Afterwards, we will get the closing balance figure. Okay. Net amount of sales during the period is $60,000, which is net amount multiplying this number by 17.5%, we will get output sales tax amount, which gives us $10,500, and input sales tax amount will be a little bit harder than output sales tax amount to find because the number is given inclusive, which is 40,286. First we need to divide this amount by 117.5% and multiply the result by 17.5%, which gives us roughly 6,000. Before finding the closing balance, let's see which side is greater than the other. The credit side is total 13,900 and the debit side is 8,600. The credit side is greater than the debit balance, than the debit side, which means we owe money to the tax authorities again at the end of the period. Okay, let's do this. Let's calculate the closing figure. And for doing this, I'm going to adding credit side figures. I find the sum of the credit side figures and deduct each of the debit side figures from this sum. And the closing figure is roughly $5,300. I hope this explanation will be sufficient for you guys, and let's move on to the next question. Question number 72. Which of the following statements best explains the sales account of a business which is registered to account for sales tax? As we mentioned before, besides in some exceptional cases, sales and purchase figures in the statement of profit or loss are always exclusive of sales tax. Therefore, we have to ignore all the options with this word including. Option B and D remain here. In option D you can see this word here, expenses, and as we know from the past practice, we don't credit expenses for getting sales figure, and only option B remains here. Let's read the narrative. It's credited with the total of sales made excluding sales tax. Absolutely true. Let's move on to the next question, question number 73. A business sold goods that had a net value of $600 to Lucid. What entries are required by the seller to record this transaction if sales tax is applied at 17.5%? I think we don't need to make extra calculations. It's clear that 17.5% of 600 gives us $105, which is output sales tax and should be recorded as credit. Credit sales tax is $105. Credit sales is $600, and debit receivable from Lucid will be $705. That's why our correct answer will be option B. Later, a customer returned goods to Streamer that had a net value of $200. What entries are required by Streamer to record this transaction if transactions are subject to sales taxes payable at 17.5%? We are gonna simply record the previous sales transaction double entry and then reverse this to get the correct answer. Okay, let's do it. When the transaction happened, when the sales happened with the sales tax 17.5%, Streamer had receivables $235 and sales tax 25. No, I'm sorry for this. $35 and 200 sales. And let's just copy and paste this double entry and reverse all the debit and credit entries. Instead of debit, we are gonna make it credit, and instead of credit, we are gonna make this debit and this one also, this one as well. Okay, and when the sales returns, it becomes sales returns or returns inwards. Okay, that's it. Let's see the correct answer. Credit receivables, or the customer's name by this amount, debit sales tax, and debit return inwards. Okay, return inwards. Therefore, the correct answer is going to be option A. Okay, let's see what we can do. Stang, which is registered to account for sales tax, purchased furniture on credit at a cost of $8,000 plus sales tax of $1,200. What are the correct accounting entries to record this transaction? In the view of IFRS, when we buy a non-current asset with sales tax, we need to account for both of them separately. Debit non-current asset, for example, it could be furniture or motor vehicle, and debit sales tax. And on the credit side, we will record credit cash or credit payable inclusive of sales tax. And let's look each of these options. Option A, debit furniture, $9,200. Yes, it could be the right answer, but the company is registered for sales tax purposes. And if the company was not registered for sales tax purposes, then it would recognize its furniture inclusive of sales tax. Option B, if the cost amount initially is given $8,000, then it will not be the gross amount inclusive of sales tax, which in the option B it's given in this way. That's why option B will not be the right answer. Option C is the right option. Debit furniture, net amount exclusive of sales tax $8,000, debit sales tax $1,200, and credit supplier, which also means payable, $9,200. Option D, debit furniture, credit supplier. The sales tax is totally missed in option D. And I think we are done with this question. Let's move on to the next question, question number 76. Okay, true, false. Sales tax is a form of indirect taxation. Yes, it's absolutely true. You might have no idea related to direct or indirect taxation, so let me clue you in. Indirect taxes levy on goods and services rather than income or profits. The most blatant examples of this are the previous questions regarding sales tax, which we were struggling with. If input tax exceeds output tax, the difference is payable to the tax authorities. I guess you know that input sales taxes arise from purchases and purchase transactions, and output sales taxes arise from sales transactions. When we purchase, we have debit balance of sales tax, and when we sell, we have credit balance of sales tax. If input tax exceeds output tax, the difference is debit, which is receivable from tax authorities rather than payable. Sales tax is included in the reported sales and purchases of a sales tax registered business. Bear in mind that sales tax will never be included in statement of profit or loss as tax, as your tax, especially for registered businesses. Sales tax cannot be recovered on some purchases. Yes, it might be. There always might be some exceptions. Let's move on to the next question, 77. Based on the following information, what was the cost of purchases? Let's make a simple payable control account, pay account, and put the amounts on the right places. Let's do it. Opening trade, the payable balances 142,600. Closing trade payable balances 137,800. Goods returned to suppliers decreases. Goods returned decreases our payable balance. That's why I'm gonna record it on the debit side. Discounts received also decreases our payables to suppliers, and cash paid works in the same way. Now it's time to find purchase figure. All we need to do first sum debit side figures and deduct from this figure opening balance BD, and here is our purchase figure. I reckon this one of the easiest questions. Just be careful what they require as an answer. Read the question carefully. Especially this part of question. What was the sales revenue figure for 2013? Which means total sales figure is required, which comprises both cash and credit sales. Okay, let's do it. And I have set receivables control account and recorded opening and closing balances. The remaining amount is $85,000, which represent receipts during the year, and 5,000 portion of this amount are receipts from cash sales, which indicates that we have only $5,000 cash sales during the year. And I am going to record this as cash portion of sales during the period. And let's find credit sales during the period. And in terms of explanation, I think I need to give double entry for this transaction, which will be like this: debit cash $85,000, credit sales $5,000, and credit receivables $80,000. Only $80,000 will be recorded on the credit side of receivables control account. And the credit sales during the period, credit sales will be $8,000 plus $9,000 minus $10,000, $79,000. And if I reckon this for in the sales of the period, total sales amount will be $84,000. I think we are done with this question, and let's jump into the next question. Move on to the next question, question number 79. P is a sole proprietor whose accounting records are incomplete. All the sales are cash sales, and during the year, $50,000 was banked, including $5,000 from the sale of a business car. He paid $12,000, which in cash from the till, and withdrew $2,000 per month as drawings. The cash in the till at the beginning and end of the year was respectively $300 and $400. What was the value of P's sales revenue for the year? Okay, now we need to find both sales from bank and sales from till separately. First, let's find out sales from bank and take into consideration all the figures related to bank, which are bank balance $50,000 and including $5,000 from the sale of a business car. Sale of any non-current asset is not operating activity. Therefore, we are not going to reckon this $5,000 as sales, and it needs to be excluded from the total cash sales, total cash receipts to the bank after deducting $5,000 from $50,000, we will have only $45,000. Let's do it in an Excel file. $50,000 minus $5,000 gives us $45,000. Now let's find out sales from till. Sales from the till. For this reason, as you can see, I've set up till T account only for calculation purposes, and opening balance is $300. Let's record this. And closing balance is $400. P paid $12,000 from the till. It needs to be recorded on the credit side of this the account, and withdraw $2,000 per month as drawings, which needs to be recorded on the credit side of till T account as well. But before recording this on the credit side, we have to multiply $2,000 by 52, which is roughly total weeks in a year. After doing this, let's find out the sales figure from the till. Let's calculate it. $12,000 plus $104,000 plus $400 minus $3,000, which is $116,100. Sales from till, and total sales must be $161,100. I have made a little mistake. Let me show you this. I didn't have to multiply $2,000 by 52, because the question, it said 2,000 per month, not per week. That's why we need to multiply 2,000 by 12, not 52. And after making this correction, we will have the correct answer. $81,100, which is mentioned in the option C. The following transactions took place during Alan's first month of trading: credit sales, credit purchases, cash payments, all transactions subject to sales tax at 20%. What was the balance on Alan's sales tax account at the end of his first month of trading? Okay, let's set up together a sales tax account, and there will not be any opening balance because it's Alan's first trading month. Credit sales of 121,000 exclusive of sales tax. As we have mentioned before, output sales taxes arise from sales. Cash sales doesn't matter if it is cash sales or credit sales. Therefore, we are going to multiply this figure by 20% and record this on the credit side of sales tax pay account. Okay, let's do it. $121,000 multiplied by 20%, which gives us $24,200. Okay, let's continue. Credit purchase give us input sales tax. That's why it needs to be recorded on the debit side. Multiply this figure by 20%, and here is our 31,422. Cash payments to credit suppliers. You need to absolutely ignore the third narrative, because sales tax arises only when we purchase or sell something. Okay, let's find the closing balance. Finally, as you can see, debit balance is greater than the credit balance. Debit side is greater than the credit side, and CD will be $7,222, which is debit. And I have made a little mistake. Let me show you my mistake. In the second narrative, as you can see, this figure is inclusive of sales tax. While calculating the sales tax, input sales tax, before multiplying this figure by 20%, first we need to divide this figure by 120%. Okay, let's correct this. Okay, that's it. The correct answer will be debit 1,985, which is option A. Which of the following statements is correct? Carriage inwards and carriage outwards are both accounted for as an expense in the statement of profit or loss. This option is not false, because both carriage inwards and carriage outwards are both expenses. But carriage inwards are classified in the cost of sales, and carriage outwards are included in the other expenses. Option B, carriage inwards and carriage outwards are both accounted for as income. No, absolutely not. Option C, carriage inwards is treated as an expense and carriage outwards is treated as income. No. No way that we can classify expense as an income. Option D, carriage inwards, is treated as income. Now stop right there. Option D is wrong. The only correct answer is option A. Jupiter returns unsatisfactory goods to Saturn. The goods has been sold on credit by Saturn at $100 plus sales tax of $20. What accounting entries are required by Saturn to record the return of goods? I reckon this is a very simple question. In the first place, we need to give the double entry for credit sales and reverse and after this reverse this double entry. Okay, let's do it. when we sold goods on credit plus sales tax $20, the double entry will be like this. Debit, double entry for Saturn will be like this. Debit purchase $100, debit sales tax $20, credit payables $120. And when we reverse this double entry, then we will copy past this double entry and make all the debits credit and all the credits, there is only one credit, debit. That's all we need to do. And let me mention one more a little point here. We need to write here purchase returns. That's it. Credit purchase returns 100, credit sales tax 20, and debit payables 120. Debit payables, I can't see debit payables. Yes, I can't see because all these double entries, all these adjustments should be made by Jupiter, not by Saturn. Let's mention this. These are records of Jupiter. And these are records of Saturn, which will be recorded. Okay, let's do it. When the sales happen, Saturn records debit receivables 120, credit sales tax 20, credit sales 100. And when the sales returns, Saturn will be recorded like this. Saturn will copy this double entry and past and reverse all the debit and credits. Credit, debit, because Saturn is the supplier side of this transaction. This must be the correct answer after mentioning a little point, which is sales returns. Okay, credit receivables, debit sales tax, debit sales returns. Sales returns or return inwards. Return inwards is also sales returns. Okay, debit sales return inwards by 100, debit sales tax 20, credit receivable, or Saturn may write customer's name instead of receivables, which is Jupiter. Credit Jupiter by 120. That's therefore the correct option will be option C. Eric is registered for sales tax. During October, he sold goods with a tax-exclusive price of $800 to Kevin on credit. As Kevin is buying a large quantity of goods, Eric reduced the price by 8%. Eric accounts for sales tax on all transactions at 25%. What was the gross value of the sales invoice for Kevin prepared by Eric? Let's figure out first if invoice sent to Kevin or Eric. As you can see, invoice, it's mentioned that invoice for Kevin prepared by Eric, which means that Eric sent the invoice to Kevin. Eric is the supplier side of this transaction. Eric is the supplier and Kevin is the customer. The net amount of this transaction is 800. Let's record this. Sales tax. Before calculating sales tax, we need to take into consideration discount amount, 8%. Okay, let's do it and multiply $800 by 92%. That's it. And now we may calculate sales tax. We can calculate sales tax. Okay, let's do it. 25%. Yes, 25%. And gross amount will be sum of these values. What was the gross value? The gross value is $920. ABC Corporation sold goods with a list price of $1,000 to Smith, which was subject to trade discount of 5% and early settlement discount of 4% if the invoice was paid within 7 days. The normal credit period available to credit customers in 30 days from invoice date. At the point of sale, Smith was not expected to take advantage of early settlement terms offered. If Smith subsequently paid within 7 days and was eligible for the settlement discount, what accounting entries should be made by ABC Corporation to record settlement of the amount outstanding? Okay, we are going to solve this question in 3 steps. In the first step, we are going to find settlement discount and trade discount. In the first step, we record here list price $1,000, trade discount is 5% of $1,000, and cash discount or settlement discount 4% is equals list price minus 50 trade discount multiplied by 4%. In the second step, ABC Corporation records sales transaction to Smith. Therefore, ABC Corporation has to take into consideration trade discount first of all, and it doesn't matter if you expect that your customer will take the advantage of cash discount or not. If you have made trade discount, you have to deduct this from list price. Trade discounts should always be treated like this. And when it comes to cash discounts, when you recognize your sales according to IFRS 15 revenue recognition, if you expect that your customer is going to take the advantage of cash or settlement discount, you have to deduct that amount from your total sales and recognize your receivables excluding cash discount, net of cash discount. And if you do not expect that your customer will take the advantage, then you recognize your sales figure only by deducting trade discounts. Let's move on to the next step. In the case of your customer pays your money earlier and takes the advantage of cash discount, in this case you will credit all of the receivables of that customer, 950, and you will receive only $912 in return. The difference between these two values, two amounts, is $38, which is discounts allowed and which should be deducted from your total sales or revenue. And the correct option, that's why the correct option is option C. I hope I was able to elaborate on this question. Question number 85. ABC Corporation sold goods with a list price of $2,500 to Jones, which was subject to trade discount of 5% and early settlement discount of 4%, and the invoice was paid within 7 days. The normal credit period available to credit customers in 30 days from invoice date. At the point of sale, Jones was expected to take advantage of the early settlement terms. If Jones subsequently paid within 7 days and was eligible for the settlement discount, what accounting entries should be made by ABC Corporation to record settlement of the amount outstanding? Okay, and again we are going to make this in the same way with the previous question in 3 steps. In the first step, record list price and calculate trade discount and cash discount separately. And I want to show you the way which I have calculated both of them, trade discount and cash discount. Okay, in the second step, when ABC recognizes sales and receivables, it should consider if the customer will take the advantage of cash discount or not. And in this case, at the point of sale, first it's expected that the customer will take the advantage of settlement terms, and thus ABC Corporation deducts both trade and cash discount from list price and eventually gets the sales figure. And in addition to this, when the customer pays and pays within 7 days, then we can reckon that customer have taken the advantage of settlement or cash discount. ABC Corporation in this case simply receives the money and credits all of the receivables, and eventually we will have 0 discounts allowed. And the most proper answer, the most proper option is option B. So let's move on to the next question. ABC Corporation sold goods within a list price of $4,500 to Block, which was subject to trade discount of 5% and early settlement discount of 4%. If the invoice was paid within 7 days, the normal credit period available to credit customers is 30 days. From invoice date at the point of sale, Black was expected to take the advantage of the early settlement terms offered. If on this occasion Block didn't pay within 7 days and was not eligible for the settlement discount, what accounting entries should be made by ABC Corporation to record settlement of the amount outstanding? Okay, let's do it in the same way again. In 3 steps. Step number 1, record the list price. Step number 1, record the list price, calculate trade discount, calculate cash discount, respectively 5% and 4%. Step number 2. In the second step, we are going to decide how to calculate, how to recognize receivables and sales. And if ABC Corporation expects that the customer will take the advantage of settlement discount, then it will deduct both trade and cash discount amounts from 4,500, and eventually we have 4,104 receivables and sales figure. In the third step, we beware of that the customer is not eligible for the settlement discount, and in this case the customer will pay to ABC Corporation more than sales price that ABC Corporation had recorded, had recognized it for this customer. Thereby, ABC Corporation receives $4,275, and in return, ABC Corporation credits all the receivables of the customer for 1,104, and the difference between these two values $171, and for the sake of the equation of this double entry, we will record this amount on the credit side of this double entry as sales, which means eventually we will increase our sales amount by $171. And here is the right option. The correct option is D. I hope I was able to elaborate on this question, so let's move on to the next question. Question number 87. Question number 87 and 88 are almost the same with the previous questions, therefore I am not going to waste your time, and I will try to be as much as quick, and I'm not going to read this part of the narrative. And let's start from this point. At the point of sale, White, the customer, was not expected to pay early and take the advantage of the early settlement. So okay, in this case, if ABC Corporation doesn't expect that the customer will take the advantage of the settlement discount, it will not deduct cash discount while recognizing sales price. And afterwards, if the customer behaves as expected, then nothing is going to happen abnormally. ABC Corporation will receive the money and clear the receivable balances. Clear the receivable balance. Therefore, the correct option is going to be option A. And let's move on to the next. Let's move on to the last question. 88. ABC Corporation. Okay. This is exactly the same with the question number 86, excluding the numbers, and that's why I'm not going to elaborate on those questions, and I will only show you the solution of this question, and I think this is enough, sufficient. Okay guys, hope today's explanation was helpful, useful for you. Just do not forget to share these videos with your friends, and thanks for watching my video up to the very end, and do not forget to subscribe to my YouTube channel if you wish so. Okay, bye guys, see you later.